Ladies and gentlemen, welcome back to another lesson from the High Performance Trader. And today I want to break down March 12th, right? Which was a day where CPI data came out, right? Is one of the best days I've had all year, right? Absolutely killed it. A very simple strategy using open print. But more importantly, guys, I want to flesh out the process. And I really want to dive deep into how I was able to have a general understanding of the market conditions, which were bullish, how I was able to identify that, how I was able to capitalize on that, right? And how we were able to communicate that information and that knowledge to the Discord for the whole team to capitalize on, right? So before we get started, guys, if anybody wants to get involved with the team, check out the links below, right? We are building a phenomenal day trading Discord where we focus strictly on mindset, right? Obviously, we dive deep into market analysis, how to understand chart patterns, risk reward, everything it takes to achieve consistent results. But more importantly, guys, the mindset it takes to show up to the market each and every single day, to combat that fear, to combat them limiting beliefs that are keeping you from obtaining consistent results because of execution. See, until we can learn to get past these conflicting beliefs, these cognitive dissonances that are telling us to do one thing when we know we should do another, right? Until we can learn to get rid of those, guys, we are going to keep making the same mistakes. You're never going to grow as a trader until you can learn to execute flawlessly, right? It's a mindset shift, right? It's not analysis, it's awareness, right? So guys, check out the links below, get involved, building a strong team, right? Any questions, comments, concerns, leave them below. Let's break it down, right? So the day I want to break down is March 12th, 2024, right? And this was CPI, right? There was tons of volatility, and I want to show you guys how I use those critical levels, right? Those pit numbers, right? The previous day low, previous day open, or I'm sorry, previous day low, previous day high, end of day, and open print. I want to show you guys how I use those, right? Coupled with market structure to put on, well, more importantly, to understand the conditions of the market and then put on risk and obtain reward. Right? So first things we're going to break down is the pre-market plan, right? So if you come over here in the Discord, you're going to see every single day I post a bullish and bearish scenario, right? It's very important for me to always have in mind both scenarios. See, if I'm extremely bullish because we're, going up in pre-market, I'm going to neglect what a bearish scenario will look like. And if I neglect what a bearish scenario looks like, I won't be able to identify that information in live time, right? And I'll constantly be going against the trend and conditions of the market, right? And that's how we continuously lose, right? That's anytime you're putting on a losing trade is because you're not understanding who's in control of the market, right? So I run through a bullish and bearish scenario each and every single day on SPY, QQQ to get me and the team up to speed on both things, right? And once again, they're not perfect, right? If you look, I put this little graphical presentation of the levels I'm looking at, right? And where I'm expecting price to go. I'm not getting super analytical here. I'm not getting super specific. On the flip side of the coin, I'm being really generalized, right? Listen, if this level holds, I'm targeting this. If this level doesn't hold, I'm targeting this, right? It's all based on structure and volume, right? So SPY levels, right? Posted 8:39 a.m. Expecting a lot of volatility in the market today due to CPI news, and regardless of what the news is, stated I will be watching end of day and previous day low very close and the patterns that show up there to determine the market conditions. Both bullish and bearish scenarios are going to be determined on who can show strength and structure today at previous day high and end of day, right? So that's my critical level, right? Previous day high and end of day. How price reacts here, right, is going to give me, once again, a general understanding of who's in control of the market. Then I could put on risk, right? So first one I did right here, bullish scenario. If buyers can show strength and acceptance above 514, I'm looking for longs targeting 516, an all-time high. If the market responds well to the data, CPI, I see no reason why we can't make all-time highs today, right? And that was really bullish. I mean, look, we were opening the day at 511, all-time high was up at 518. But using the news, using the volatility for your benefit. See, a lot of traders, right? I don't like to trade news. Oh, anytime news is out, I sit down. Listen, that's fine, and I understand why. But the way you're looking at the scenario is going to paint the picture. So if you could learn to look at news as a strength, as an opportunity, it's going to increase volatility. Volatility not only gets us paid, but gives us a really, really good reward, right? So we have to learn to use volatility for our benefit, right? So once again, I see no reason why we can't make all-time highs. So in bullish scenarios, the acceptance above 514. Bearish scenario, the gap fill, right? So market is making a large move up in pre-market. So today I will be extremely aware of what a gap fill will look like, regardless of where we open today. In a bearish scenario, I'm looking for sellers to show strength and structure off open print, right? We're gonna get into that. Invalidating bullish conditions, looking to target previous day high and end of day, expecting EOD and PDH to be magnets today in a bearish scenario, right? So basically what I'm saying is we're opening up, you know, we're much higher than end of day. The market's created a gap in pre-market, right? So I'm looking for price to come down, close the gap, and then whatever happens at end of day is gonna help me understand if sellers or buyers are in control, right? So first thing I'm gonna do is map out our pin numbers, right? Our critical levels, previous day high, previous day low. That's open print, so we'll save that, and then end of day, right? So this right here is what I was looking at, right? And now we got pre-market high right here, 514. Remember when I said in the pre-market plan, anything above 514, I'm looking to long, targeting all-time highs, right? So market moves in structure, right? If we could find acceptance above this level, right, over here at 514, there's no reason why we can't come up to 516.85, right? These are going to be my general targets. I think, and then this guy right here. So we got 516, right? And once again, I'm just grabbing, right? Oh, I'm grabbing areas of structure, right? I used to be a really big supply and demand trader. Oh, that's an area of supply, it's an area of demand. Listen, now it's all structure to me, because whether or not it's supply or demand really is irrelevant to me. All what I'm looking for is how the market reacts to the level, and then trade to the next, right? So over here, this is what it looked like in pre-market. I got 514, which is my my level of acceptance in a bullish scenario. I'm looking for longs above it or into it, and then longing into 515.84, which is this little left shoulder over here, 516.83, and then all-time high at 518.18, right? So once again, how price reacts off previous day high and end of day is gonna help me paint that picture, right? So now let's dive into it. Okay, so price opens up, right? So the first thing we do right at 9:30, hold on, where is my, there it is. So once the bell goes off, ding, 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 right? I take a level and I put it there. This is what I call open print, right? Now guys, the reason why I do this is because look at all the volume that goes into open print. That opening bell every single day, when it goes off, there is immense amounts of orders that go in. I don't know if they're bullish, I don't know if they're bearish, it doesn't matter to me, because all I need to know is identify the area with the volume. These are the areas large money makes their moves, because they need an equal and opposite person on the other end of their transaction. If large money's bullish, they need tons of sellers. If they're bearish, they need tons of buyers, right? Because every transaction in the market has an equal and opposite person on the other end of it. So for large money to make money, they need orders. So anytime I see mega volume, I go, bing, what's large money either doing here or going to do here again? And based on your ability to identify the chart pattern at these critical levels, you will have yourself an amazing edge, right? So price opens up 9:30, sells off, boom. Comes down right in the previous day high, right? Now, there's many reasons why I'm not ready to go short here, right? some of them, I mean, the first one being end of days right next to it. Anytime you get two critical levels, it's worth waiting to see how price reacts at these levels before just taking your first short play because you close below it. See, a lot of traders can do that and they're good at it. And I'm not faulting them for any reason. But for me to put on a trade, I need a really good understanding of the story. I need a really good understanding of how price is reacting at these levels. See, I'll sit and watch the market all day. I may not even put on a trade. If the market doesn't present to me my edge, I do not act because I know the only way for me to continue to get my consistent returns is by only acting when my edge is present, right? And once you get that clarity on what works for you, you then get rid of, once again, the cognitive dissonance, the conflicting beliefs that are just causing you to just enter trades because it's in front of you, right? Because listen, if you truly knew your edge worked, you would only act on your edge, right? It's very simple. If you know that your car's gonna work today, you're gonna get in it and drive it. You're not gonna take your bike for no reason. Your car works, so you drive your car. It's simple as that. Same thing in the market. Your edge works, so you trade your edge. All this strategy hopping is gonna kill you. All this, I know, I understand social media can be very beneficial, but you got all these different strategies. You got to understand, you consuming all these different strategies and ideas is giving you conflicting beliefs. It's keeping you from sticking to your one strategy. Find a strategy that works, put on risk, stick to it, right? So price comes in the end of day, right? And I'm watching how price is reacting to the moving average, right? That's the 9D EMA. So based on how price reacts here to this moving average, I will then understand, hey, this is a healthy trend or it's an unhealthy trend. Look at how price came in the end of day and just snapped right up, right? Let me show you guys what this looks like without pre-market data. It's crazy, it's clear, it's insane at how the picture is painted here, right? So we gap up significantly, right? So our bearish scenario was a gap fill, right? We ripped right in the end of day, right? And then buyers started to defend it. Look at the volume that pops up when price hit EOD. Look at the volume on the candle before it. This right here is a clue. This is telling me somebody's interested. Somebody wants to defend this level. Once again, whoever defends it is gonna control the conditions of the market. So this is my clue. This is my canvas. This is how I understand the story that the market's painting, right? This is what gives me my edge. So price comes in the end of day, we get large buying right off the gate. See, I didn't chase this, I didn't want to chase it. Because if I'm the trader that always enters at the first sign of some sort of buying at end of day, I'm going to get smoked. This is not enough for me. I need structure. I have my criteria, once again, my edge, and I stick to it, right? Critical level, A, structure, B, and a healthy relationship between price and my moving average. Those are my 3 steps to put on consistent, phenomenal, high probability setups. So I stick to it. I don't care. If this thing just rallied all day, I would just watch it. It doesn't matter to me. Until my edge is present, I don't put on a trade. I think that's one of the main reasons so many traders fail is their inability to sit patient, wait for their edge, and put on risk and accept risk, right? So price rips up to open print. This is where the market gets extremely cool. Because now, check it out. Remember earlier all that volume at OP, right? So once price comes into OP, notice level, end of day, to level. This is called market imbalance. The imbalance between supply and demand between end of day and open print, right? At end of day, there's tons of demand. At open print, right? There's an X amount of supply. So if demand exceeds supply at open print, we're going to get another market imbalance up to 516. That's just how it works. Once again, it's never 100%, but that's what's going through my mind. That's what helps me understand the story. That's what helps me put on risk. That's what helps me hold from critical level to critical level. See, a lot of you traders struggle with that, right? Holding, right? And I understand why you struggle. It's because you're not aware of what's really going on. If you had an understanding of the transaction, the market auction, you would have a way higher probability of actually holding your trades. Why? Because once again, it makes sense to you. Getting rid of the cognitive dissonance, the conflicting beliefs that are keeping you from actually following your rules, right? Because when you're up, I don't know, 40% in this trade and you go, ooh, I'm just gonna book it because I don't know what's gonna happen. I'm up $1,000. I'm good today, right? No, listen, dude, play the story. If you play the story, because once again, guys, whatever's happening in the market's external, we can't control that. Only thing we can control is our perception of the story and how we act on it. And based on how well we do that is how good results we're gonna get, right? So look at how price comes into open print here. Right? I want to bring it back to what I was talking about with that story, right? We have demand down at end of day, right? Let me get rid of previous day high just to clear this up. So we have demand down at end of day. Price comes into it. A large supply at open print. Price comes into end of day. We find demand. Buyers rip up to open print. There's still some supply up there. There's still a aggressive seller, let's say. Right? So now we have an aggressive buyer, an aggressive seller combating over the area. Now, whoever defends the area, whoever wins the battle, I want to trade with. Josh, how do we understand who wins? Through the chart pattern, through break and retest, through the 9D EMA, and through structure. That's your criteria. That's what you look for. And whoever can hold them down, you want to trade with, right? This is what gives me the conviction. So notice we're above the 9, but we're a bit extended. I don't like playing when we're extended, right? So I watch how price reacts right here when it comes back into the 9. If buyers can show strength right here, right? And what I mean by that is we're not coming super below it, right? Buyers are defending it, right? They're holding it down, right? Because it's a moving average. It measures strength. Well, it measures price. It measures the average price. But in a way, it's measuring strength or weakness as well. Because if we can't get below the 9, it's showing that buyers really want it and they want it more than sellers, right? So notice we can't get below the 9. We rip up into open print. We close above open print, very bullish. Once again, I don't just enter though. I'm just taking this and documenting it in my mind, right? We close above open print. We come down and retest and find acceptance. Guys, this right here is what I call acceptance. Notice we can't get below open print. We can't get below the 9. Structure's been broken at open print, and now we can't get below it. At this point, I'm willing to put on longs, right? We called it out in the Discord, right? First, let's see. I'll show you guys. So over here in the Discord, you're going to come to SPY alerts, right? So this is where I call out every single trade I take on SPY or SPX, right? So let me find March 12th real quick. March 11th. Okay, right here. At 9:15 a.m. in this long stop at 513, first target pre-market high using the 9D EMA as my guideline. We hold it, I stay in. 513.40 is stop. 514 breaks, she's gonna rip, right? So let's check this out. Take the market long at 10:15 a.m., which is this candle right here, right? Once buyers really defended that 9, price started to rip into 514. We break 514, we rip, right? Now let me show you guys where pre-market high was. I want to show you exactly how we executed this because trade management is critical. So our first move is open print to pre-market high, right? So price rips right into open print. We find acceptance. We take price right up into pre-market high, which is about a $1.20 move. And you can notice here, we never broke the 9. And what I write in the Discord, until the 9 is my guideline, we hold it, I stay in. Because I understand the conditions of the market right now. I understand buyers showed a lot of strength. I understand that we found acceptance above open print. And now I also understand market imbalance, level to level. Open print, pre-market high to 515.90, right? So price held it down. We ripped into pre-market high. We then ripped right into our target at 515.84, right? So this was an amazing trade, guys. Not every trade's like this, but once again, I want to show you guys how I understand the conditions of the market and put on risk. Right, guys, hope you enjoyed this video. Like, leave a comment, subscribe for more content, right? If you want to get involved with the Discord, hit the links below. I will see you.